Here now are a couple of more growth and income stocks that our growth and income stock strategist, Todd Bunton, wants you to know about. A couple of different categories here, but the first one is HealthSouth, HLS, the ticker.
Yeah, they're the largest owner and operator of inpatient rehabilitation facilities within the U.S. They operate in 28 states. They're in Puerto Rico, but they basically provide rehabilitative care to people recovering from things like strokes, heart and lung conditions, amputations, brain and spinal cord injuries.
So physical rehab.
Yeah, exactly. And in terms of, obviously the healthcare industry is going through a lot of changes right now, but they don't expect any meaningful impact from the Affordable Care Act. And actually already over 80% of their patients are come from Medicare, or are reimbursed through Medicare. So it doesn't affect them too much there. But the company delivered a very nice beat and raise on October 28th, and it's actually their 8th consecutive positive earnings surprise. So they've been delivering very solid results, and they see solid revenue growth, and they're pretty efficient in terms of cost, so they're able to deliver solid earnings growth, solid free cash flow growth, which they're returning to shareholders, which I'll get to in a minute. But if you take a look at consensus estimates over the last several months, you can see a nice steady uptrend. I brought with me the price and consensus chart. You can see, over, like I said, 8 consecutive positive earnings surprises, and analysts consistently kind of bump up their estimates. You can see a nice stair-step pattern in consensus estimates. So very solid earnings momentum going on here. If you look at consensus estimates, analysts expect about 11% earnings per share growth this year, 7% growth next year. So you've got a good high single-digit, maybe low double-digit earnings growth story here. Again, like I said, now their biggest customer is the government, and they're looking at ways to cut costs in the healthcare industry. So that is kind of a risk going on here, and I think that's kind of reflected in the stock price right now. But again, so far they're doing very well. Delivering positive earnings surprises and beating analyst expectations. If you look, they also pay a dividend that yields 2%. They recently implemented a quarterly dividend, so I'd expect that to increase as the company continues to grow over the next several years. In terms of valuation, they trade about 18 times forward earnings, and that's right in line with its peer group. So, there's a lot to like about this company here, especially if you think about the demographics of this country are getting older, and people are requiring more health care. So they're in a good spot to be, I think, overall.
All right. What's going on with Rockville Financial?
Yeah, this is an interesting one. They're a community bank. They're headquartered in Connecticut, but they recently had a pretty big merger, kind of a merger of equals, really. They acquired United Financial. And when combined, they're going to have about $5 billion in assets. They span 2 states, Connecticut and Massachusetts, about over 50 branches when it's all said and done. But if you look at it just by itself, the company delivered a very solid earnings beat on October 24th. They saw solid net interest income growth, and through operating leverage were able to grow earnings per share at a healthy clip. But analysts also expect this merger to be accretive to EPS over the long term, and they've raised their estimates over the last several weeks after the announcement. If you take a look, you can see in the price and consensus chart actually a nice big jump in consensus estimates. And again, that's driven in part by solid operating fundamentals, but also because of that merger. So pretty good merger here. The market likes it, analysts like it. If you look at consensus estimates, analysts expect about 17% earnings growth this year and 27% growth next year. On top of that, they pay a dividend that yields 2.7%, so very solid income to go along with that growth, and all at a very reasonable price. They trade about 1.3 times tangible book value. The industry median is 2.3 times, so there's some value to go along with the growth and income metrics here as well.
All right. Do you own either of these?
I do not.
More stock picks on our website, Zacks.com. If you haven't checked them out lately, get on over there if you're not there now. Check back often because they change often. With Todd, I'm Terry Ruffalo.